Hello everybody, this is Brandon from Galaxy Stock Market. Welcome to my part 2, market technicals and stock to watch as we watch for the market crash. Okay, let's get right into it. This is the part 2. If you haven't seen my part 1, please watch that. Okay, it's about the bond yields in gold and silver. Here's the disclaimer. Please pause it, read it. If you agree, please move forward. And also, don't forget to like, subscribe, and share my videos, okay, and watch it. I put a lot of time into it, and I thank you so much for subscribing. Okay, we're on x.com, x.com/Galaxy Stock Market, where I post real-life information as well as any news that might be pertinent or having active discussion. It all happens on x.com, folks. All right, so the gist of our video is that we are on sell on Rosh Hashanah market crash watch. This is the part 2, market technicals and stock analysis, where I'm going to be talking about some stocks that are very interesting to me that you might also want to do further research on for this upcoming crash that is coming, folks. And of course, none of my technical analysis will be complete without me talking about the Fear and Greed Index. And why do I talk about that? Because it is a contrarian at most times at extremes. And the previous week on September 27th, the Fear and Greed Index was at 68. And as of last week, October 4th, okay, this is as of October 4th, we're at 74. Again, I talked about this. We remain in greed. We're almost in the extreme greed region where a lot of market dislocations and sell-offs and crashes and corrections began. We are extremely overbought, and the market has been stalling, unable to get above SPY 575. I told you that might have been it in terms of the climax run or blow off top. But let's talk about that. Okay. All right. So very important. Where are we in terms of our long-term monthly uptrend line? Well, we need to tag these upper trend line. A lot of times when these upper trend lines have been tagged, it brought in a very severe corrective or crashes. Okay. And then, of course, the bottom channel touch has led to a rip your face off rally. Now, it doesn't have to touch that line for us to get a corrective phase. We talked about this at length, but it would be nice because it would give us something that we can trade on and know that the correction is coming almost immediately. But right now, we are churning, and we'll take that because also this market rally is running out of time at this point. And we are in that October presidential cycle, Rosh Hashanah, sell on Rosh Hashanah, buy on Yom Kippur phase. It doesn't always have to work, but it sure does have a significant presence during the presidential election year. And everybody that thinks that the market cannot decline ahead of the presidential election cycle, we're not in a normal presidential election cycle, folks. There are so many things that is wrong about our country. There are so many things that has polarized and divided our country. Now more than ever, the powers that be, and whoever that may be. I mean, if you're biblical, then maybe it's Satan or God or the deep state. I don't really care. I do know that the markets are no longer free markets. It is highly managed and manipulated to gain maximum control over the populace. That is you, the populace. Okay? So are we going to tag that upper trend line after the elections or before the elections? And if it doesn't happen before the elections, then how much further can we go down? All I can tell you is that there is caution ahead. There is storm brewing. If you haven't seen my part 1 video, you need to go watch that because despite the significant interventions in China with their liquidity injections, what are they worried about? Okay, guys, look at some of these Chinese stocks. They are super overextended, and it's artificially overextended, and they're making their climax runs right now. Okay, hint, hint. And then, of course, the Federal Reserve's 50 basis point cut has led to a gangbuster parabolic, not hyperbolic, not yet, but I think it may head to there, but parabolic rise now. It's getting very impulsive. It's rising The intent of Fed rate cut is to tame inflation, decrease borrowing costs. More importantly, I need you to be watching the banks. And again, all of that is detailed in phase part 1 of my video prior to this. All right, spent a lot of time on it. I suggest you go watch it once, twice, and of course share it. And of course, if you're a new subscriber, again, I'm going to tell you, please subscribe. I love subscribing. It motivates me to keep putting out these videos. Okay, so let's move forward. Okay, and so for this week, we basically are churning. This is churning from previous week. This week we churned. We kind of, churned around right at the midpoint. Here's the upper level and the lower level as calculated by the options chain. Okay, and it was predicting a move of 58.73.14. We never even got there. So therefore, I'm telling you that market is distributing near the top, which means that the powers that be, including CEOs like Jensen Huang on NVDA, I advise you to watch that NVDA. Similar things to SMCI may be coming. There's more cockroaches that ring the bell at the top. Okay. Jamie Dimons of the world, Warren Buffett in his tender old age is still selling and actively working on what I believe is insider information. I mean, he's a sage of Omaha, yeah, but where's he getting that information? By the way, Nancy Pelosi's husband has bought a bunch of uranium stocks, okay? Uranium goes into nuclear stuff, like nuclear power plants, nuclear bombs. All right, pay attention to that. I'm not going to cover that on this video. Okay, so let's keep moving forward. Okay, shall we? All right, so I'm going to start off by talking about this SPY chart that I've been posting on my videos. And it's very important for you to understand that these are all rate hikes that led up. Okay, and then the rate cut expectations have basically rallied this market. We finally got our rate cut language and then a rate cut right on September 18th. And since then, we rallied, we kind of pulled back, and we're now testing that downtrending line. It is basically diverging. And the question is, again, that long-term monthly uptrend line, are we going to tag that top end, which I believe is right around 585 to 605, okay? Or are we going to start failing? We are running out of time in this situation. So that is one warning that I want to give to everybody, okay? And then, of course, my Magnificent Four that I like to call it, which is a conglomeration of NVIDIA, Meta, Apple, and Tesla. And then I like to compare it to Dow Industrials. Dow Industrials right here, and then of course the transports. What I will say is that Tesla, which is the magenta line, and Apple are both diverging away from Meta, which is the only lone leader that is defying logic. And of course later on, when we get that sell-off ahead of the presidential elections, because this is what the powers that be do, okay? Notice all the increases in natural disasters, wars, and all of these panics with the dock worker. Those are all by design, in my opinion, to basically disenfranchise those would-be voters, and I think they're very afraid of Trump, okay? Now, I think, again, presidential leaders and Congress and senators, I don't think they're elected. Okay, I think that they are selected, and we'll see. A lot of people think Trump has some divine, anointment, and we'll see about that. Okay, we'll see about that, because I do believe that this world needs a miracle and it needs a godly intervention, but I'm not sure. I think leaders are selected. But having said that, Meta is the one leader that is remaining. Tesla, Apple, and of course NVIDIA. Watch NVIDIA with SMCI. They have similar accounting practices, and Jensen Huang has sold significant amounts in the billions of his stocks year to date, and he continues to sell while you guys are buying. Don't become exit liquidity. But the most important thing that I want to talk about is this Dow Industrials, which is the red line right here. Industrials are basically chugging higher, while the retail traders, that means you, are becoming potential exit liquidity. but the transports, okay, are diverging. They are not following together. This divergence is the Dow theory transports, and it is very, very accurate in predicting market corrections and crashes coming forward. And I'm warning you again, this is the warning. Tesla, which is basically my market leading barometer, when Tesla starts to diverge, and I think Tesla is running ahead of the robotaxi event, it will become sell the news, folks, and I'll talk about that in a little bit. Apple, okay? Who the hell is buying the same Apple that hasn't changed in design, other than marginally getting faster and bigger and fatter and heavier? Who's buying that crap? And NVDA, okay? NVDA has two real customers, folks. All right, let that sink in a little bit. They're diverging with Meta. Why is Meta going up? I don't know. Is it because Zuckerberg is saying nice things about Trump? I don't know. Okay, but I do know that there is a divergence and that Meta is the only one leading the markets higher, while Dow and Dow Transports are diverging. There's warning number 2. Okay, so I want to talk about the fact that we are in Rosh Hashanah. We talked about that. Sell on Rosh Hashanah, buy on Yom Kippur. I believe buy on Yom Kippur might be the wrong things that for you to buy. I don't know if that's going to become a buy the dips per se, but I do believe that there will be a rip your face off rally, probably post election, sometime between late November, heading into Black Friday on November. However, be aware of October 2nd and beyond. We are now on October 6th. Okay, as I make this video, and probably October 7th when you actually see this video. Our members get this video before. Okay, now what do I mean by that? Because I think this is a very important and astute observation by Options Greek, is that in the past 20 years, the second week of October has never closed green during election years. So what do I mean? Well, I mean, I agree with that completely because, we're heading into that second week this week. And there's some crazy stuff happening around our world, right? Earthquakes in Tehran, just people gearing up for wars. There's a hurricane again, another one, guys. So how is it possible that they come in? And basically, we just had one in North Carolina. God bless those people. All right, FEMA, go help them. Okay, stop sending money overseas. All right, we have money, or if you don't have it, just print it. That's what you do. All right, but SPY over the last 20 years, the second week of October is red, and I'm anticipating that there will be something in the month of October while we're in the Rosh Hashanah phase. Okay, but not only that, the third week is no cakewalk. Okay, historically during election cycles, and then the third week is pretty significant. Okay, now as we get out of Rosh Hashanah into Yom Kippur, it starts to stabilize a bit, as noticed by here. However, this is a big however, okay? I think elections are going to create additional uncertainty, especially now. We are more polarized than ever, all right? All right, there's more racial division. There's more social economic problems, all right? There's violence and all of these things that are happening. And on top of all that, the mainstream media doesn't tell you the truth. Okay, so that's kind of what we got, right? I mean, it's like everything is a narrative. I'm probably going to get in trouble for saying it, but I'm going to tell you the way it is. All right. So having said that, so let's look at this a little bit closely. Is that, during this second week, all right, in 2004, we fell by 1%. But notice how, as the presidential races become more contested, like in 2004, I actually believed in the whole process. I thought it was a fair election. 2008, I kind of still believed. Right? And we were just coming out of the financial crisis. I was too busy making money shorting the markets at that time. We fell 19.79%. 2012, as the recovery tried to commence, 2.2. And then we had 0.99 in 16. And 2020, we had a 3.9% drop. But also look at this significance down here. Okay, and in 2020 also, in October 10th, we had a pretty significant drop. What I'm trying to say is that I think this is related to Rosh Hashanah. It doesn't have to be correlated, but it is related. And I think that, the powers that be are very numerological. They are very, very methodical in the way they do things. But this year especially, you can just see the efforts in trying to create panic in one way or another to scare the general people into submission. Okay, how great would it be if we start? How great of an effect would that be? I'm talking about the deep state. If they basically can start creating fears within the market, would get people starting to worry about their retirement, and then try to produce a Hegelian dialectic of sorts, create the problem and then offer a solution that basically that human beings in America, because I don't know. I mean, I don't know how we became so obtuse, but as a whole, our population will gladly give up our freedoms in exchange for short-term assurances and, security. And, that's what they've been doing for a long, long time. Okay, so let's move on. I beat this to death. You know what I'm talking about. Salah and Rosh Hashanah. And I think that's going to be really, really profound this year. Okay? So let's get into the fact that there is consumer demand destruction that may be leading into a deep recession or worse. Okay? And then, of course, recession or depression or, deflation. Okay, right now we're inflationary. The fact that the Fed has cut 50 basis points and we're going gangbusters since they cut. We're at 39.5, threatening to break 40. All the bond yields from 1 year all the way up to 30-year has spiked higher, thereby increasing borrowing costs, increasing, we have trillions and trillions of dollars of federal debt that we need to basically service. And that cost has gone up, and all of our zombie banks are basically insolvent. Okay, they're not marking to market, but they're holding on to assets that are non-performing, and that continues to create problems. Again, watch my first part of the video. Somebody tapped the discount window that is only available for broken banks, and somebody tapped it in the excess of $2 billion. I believe there's a bank out there, and we'll talk about that bank. Okay. And of course, bank failures are coming. So on that fantastic note, let's talk about now what I want to do with this technical analysis of mine. Is the McClellan Summation Index broken? I still think it may be, but it is basically trending in the right direction. It is an early warning system, okay? And everything is pointing towards a potential crash. But I told you that McClellan Summation Index, because of all the money printing, because of all of the interventions, the rescues and propping up of banks, I think it's broken. I still think it may be divergent, but we'll see, because it is fitting in with the technicals right now. Let's look at put to call ratio. We are basically at this bottom end where if we start touching it, maybe we get one more rally attempt on Monday or next week, and then we start rocketing higher. The question is, can we get above this level? Okay, and then move higher into this range. Okay, the last seen in January. Okay. So the question is that the put to call ratio, this is a contrarian. It means that people are complacent. Okay, just like my fear and greed indicator. All right, let's look at the VIX. I told you, we talked about this, that these levels, these are from previous charts that I've mocked up, and we just kind of see how it goes. I said this would be an area at that tag of this the 20 SMA. 200 SMA and this volatility box, that we would be going higher. We're now trying to find support right off of this auto support and resistance level. Can we get above 24? If it does and finishes above there, we may end up taking these out. And I think there's going to be a sharp sell-off that is coming. And watch VIX, folks. All right. All right, so let's look at the SPY on the daily really quickly. All right, there is divergence in the RSI as we're losing momentum. Everybody thinks that this is looking like it's forming a little cup formation. Oh, Brandon, it's going to break out. It's going to break out and start tagging that upper trend line. Good. I mean, either way, I'm fine. Right? I would rather this market run up and quickly tag that upper trend line somewhere up in 585 to 605. Okay? Because that would give me an objective entries, and I don't have to keep guessing. However, this market is running out of time. Okay? All of these levels that I'm pointing out here, okay, is a first area of support. And these are targets, folks. Pause it and look at what I'm looking at, what I'm telling you. All of these things are the initial targets for which, if a giant sell-off ensues, which I think there will be, okay, these levels will be taken out in short order. All right, pause it again and watch this. My job is to show you the technicals right now. Right now, the RSI, I mean not RSI, but MACD is basically trying to get above and form some positive MACD histograms, but they're trending down. Okay, CCI is negative. Okay, it's kind of losing momentum, but everyone thinks, yeah, can this look bullish? Maybe it'll have a bullish cross and then go up. Great, I welcome that as long as it happens. But there is a time component to all of these stock market moves, and the stock market is running out of time, folks. I don't care what you think, it is running out of time. Oh, but Brandon, look at the stochastics; it's ready to form a bullish cross. So what? It's gonna tag up here and make a lower high, and then come back down. PPOADX is also pointing to us. It is forming the bearish formation on the crush indicator. We're beginning to do this. There's a little blip here. Okay, these are minor blips. Okay, that might cause maybe a day or two of attempted rally, but we are stalling, guys. We can't get above the prior highs. 575 on the SPY, we cannot get above. Okay, so let's look at the SPY on the weekly. Okay, it's more pronounced, right? We have lower highs. RSI is declining as we're churning higher. Okay, hitting that upper band of the Bollinger Band. Everyone thinks we're gonna go straight up higher. Great. Again, let me tell you this. Okay, if it goes higher and tags that upper trend line, great. That means that a big crash is headed our way. Where we have to guess is that if it doesn't tag that line, we pull back. We know that there is a significant rally, and after the elections, probably right before again November, right before Black Friday, where everybody goes shopping. Okay, it is a seasonally congruent time in which rallies will happen into the close because of the Santa Claus rally, even during market crashes or during market dislocations. All right. The issue is that it is churning at these levels. It just basically, the volume is declining. We're above all the major averages, so, can it go higher? Of course it can, and I hope it tags that upper trend line, but it is running out of time. That is my message, okay? Where can it go if it starts to fail? First and foremost, this 561 level, 77 I tell you about, it coincides very closely with the ADMA. This green line right here, my moving averages. That's how I use my moving averages. And then probably target the 20 SMA if sell-off ensues. This rising trend line will offer the first area of bounce for which you can add into shorting the rips. And then we get into our first volatility range. All right. And pause it and read it. Well, watch it. Okay, I think this is the ultimate target if the sell-off ensues the way it does, and then we get a mega rally. At that time, if we didn't tag the upper trend line, maybe even take it out into next year, end of January to February. And I think that's the schematics that I'm looking for. The volume is declining. We have the MACD basically still diverging. Okay, I know it's trying to get above this line. Okay, and we'll watch that. CCI is divergent. All right. Stochastic has run its course. I mean, it's basically beginning to curl over. If it makes that death cross, I think that's the indicator that you need to be looking for. That's what we're going to be looking for. PPOADX has not yet committed to any type of a real plan. It looks like it may be doing this in the short term. Okay. All right. Something like that. Okay. Accumulation and distribution. Look at that, folks. I mean, that is literally at the upper end of the accumulation range, and we did break down, and there may be a trend change coming. I use ATRs very differently. Yes, I do use it for range, but I also use it for directional change at extreme moments, and I think we're there at this point. All right, the bell ringer, SMCI, really quickly. I talked about this, and I included it again. I talked about this in the part 1. This is a bear flag, folks. SMCI is being investigated by DOJ. They have many shell companies that they have ownership interest in funneling money back and forth to create an illusion of profit. Enron, anyone? All right. And I think NVDA might be engaged in the same thing. Not sure yet. So what is that mystery bank that might have tapped the discount window, federal discount window? I believe it may be Bank of America. Okay, it's Warren Buffett has been dumping again. Look at the part one. We have some news on that. Okay, and it's making this parabolic, not gapping higher and running smack dab into this resistance downtrend line. Okay, even if it pokes above higher, it can go higher and then start breaking down because the banks are propped up and artificially inflated by the Fed because they can't have banks failing right now unless they want to scare you into something else, or they have a new monetary system. Okay, volumes are declining on Bank of America, and then of course we have a little crossover forming, but the MACD is very, very flat and trending down. CCI is basically flat. Stochastics, it's warning you. It's making lower highs, folks. Even though it crossed over here on this daily chart right here. Okay, and that's what it does when it basically gaps higher, right? Will it become a gapping crap, or are they making a final blow off top? All right, PPO ADX short term is forming a bullish signal. That's probably what coincides with this bounce, but over the longer period, I think we're making this type of a formation, which is bearish. Okay, PPO does not lie. So the accumulation distribution is trending down. Okay, I mean there has been on Bank of America concerted sell-offs. Thanks, Warren Buffett. All right, where'd you get that info? Please let us know. All right, are you really the sage of Omaha, or was it Charlie Munger show? Rest in peace. All right, so what I want to know is that are we going to break this trend line and go higher? That would bring the S&P down. Okay, again, I use ATR very, very differently than most of you. Here's BAC, again, on weekly. Weekly is more pronounced, right? We're kind of in this triangle formation. Here's the top. Okay, we're making lower highs as we're declining in volume. Okay, as we were coming up from the bottom, you can see these continued accumulations that were forming, and they're very, very uniform, okay, all the way through, okay? And is that the mask or the smoke screen that the market makers are putting in while Warren Buffett dumps into the market as to not create a market panic, okay? I think he's mostly done selling, and so this MACD may top here and then come right back down. I do believe that we're going to start coming back down. If there is a little bounce, I think if you can buy more time and know how to price your options and find expirations, I mean, I think this is the one. I believe so. CCI is really divergent, and we have basically stochastics that has fallen off, and this is just a dead cat bounce. I think it can go all the way up to here and then fail. PPO ADX trying to form, it's clear at least here that it's trying to form this, this bearish divergence forming. All right, and so we're looking at the accumulation distribution negatively diverging. Again, we had this uptick, okay, and then are we going to cross back down, or are we going to go higher? Okay, either way, that's going to signal a directional change. That's Bank of America. And then we got NVDA. Okay, watch NVDA, folks. All right, I know it's a darling, but you don't like it, but look at, we're making concerted lower highs on this nice trend line. It's pointing down. Okay, we've got this gravestone type of doji right now, and then can it again go for this upper trend line and fail? RSI is losing steam, volume is declining except for all the sell volumes. That's Jensen Huang selling to you, folks. All right, don't the CNBC people, Wall Street Journal, they are not your friends. They want you to become exit liquidity. The question is, MACD histogram is divergent. CCI is basically topping out. Okay, it's significant. We got the stochastic crossing over, but again, the issue is it going to top out right here and then finish? Okay, all right. So enough on that, right? I think realistically, NVIDIA offers a great. If the market sell-off is happening, you have to be looking at this. Not financial advice. You need to do your own research. Okay. The other one is, of course, Netflix. All right, from the bottom of 2022, Okay, we've got this situation where now we've gone on this torrid pace, okay, and now we're hitting the 0% retracement. This is our Fibonacci retracement. We're near the top, but people are saying, but Brandon, it poked above there. Well, this one poked above here. Let's see if it fails there, folks. If it fails, and by the way, earnings season starts this Friday with JP Morgan Chase and BlackRock and Wells Fargo. And then, of course, Domino's Pizza, I like, which reports on Thursday in the morning. Okay, consumer demand destruction. Just a little plug. Okay, I have so many stocks to follow. I mean, just letting you know. If this fails, this will not stop until it gets down to at least to 38.2%. Is it all going to happen in one night? No. It could. The earnings are coming up for Netflix in 2 weeks. Okay. Think about this, okay? There is a significant possibility of over 180 point decline plus, okay? People are canceling Netflix because of their political affiliations, and their shows are kind of boring, folks. It's all woke crap, okay? So it's just, bring back wholesome things. We'll like it better. Tesla, folks, look at Tesla, okay? Tesla is another one. I know those of you that are conservative or looking at, Trump rallies, Elon Musk attended it, okay? Don't let emotions get into this, okay? This is clearly telling you that we are topping out here. And we are basically, again, trying to stall out. Robotaxi event is this Wednesday, okay? So it's October 9th. Will it become a sell the news? It sure looks that way, especially if there's some geopolitical events or the hurricane starts wreaking additional devastation and knocking out those ports. All right. I'm not sure what happened with those port workers, but it sure was a sad display of how gullible Americans are. The president of ILA, the dock workers for the East Coast, he looked like he had an explosion in Cartier. He's Mr. Cartier from now on. All right. And that failed, so the storm will probably give them what they want. CCI completely went, when CCI is at these extremes, it usually leads to market sell-offs, and we're basically coming back down. Okay, we have a lot of ways to go. At these bottom levels, they are extreme, and they are contrarian, all right? So, I'm not going to get more into that. Watch Tesla ahead of the Robotaxi week. Amazon is having Prime Week, August 8th to 9th. Amazon has a history of selling off post-Prime release of their numbers. I think we may tag here, and it's going to come down. Look at all these boxes. These are what our members get. You can pause it and try to get an idea if you're a do-it-yourselfer. Okay, this is what I'm here for. I still want to help you even if you're not my member. Amazon again, all right? Okay. Oh, I had two of them there. Sorry. This is the weekly on Amazon. Okay. Clearly, you can see that there is divergence, and this looks pretty bearish to me. Again, if the market is going to sell off in earnest, these are the stocks, some of the stocks that I want you to look at. Okay. And then, of course, China has turned bazooka into their economy, injecting trillions upon billions upon trillions. I don't know. The number's going to go up to that level. Into their liquidity. What are they afraid of? Okay, as a result, BABA has gone on a parabolic run, and it is putting in a climax top, folks. This is a no-brainer, okay? Go figure it out. It's going to come right back down. Look at all these gaps that are going to be filled in short order. All these boxes are gaps. Look at these excessive volumes. These type of mega volumes occur at the climax top. So this is something that I'm excited about, okay? This is the BABA is, on the daily, it's showing you that, okay? On the weekly, okay, we're at extreme RSI. It is overbought, okay, significantly. Here's a clear cut of overboughtness. It is at phase 4, exhaustion run phase, folks, all right? Maybe it goes a little higher. Will it get above this 200 SMA, or will it start failing and start filling these gaps down here and down to these trend levels, okay? That's all I have to say about that one. Okay, bank failures are coming, folks. Okay, you do what you need to do to protect the money, but there's been bail-ins at Cyprus and various other countries. I think Bank of America had basically a glitch where everybody lost their money and it went to zero for a while. Okay, they're testing it. I believe that. All right, so market crash watch part 2, technicals and stocks. Well, we hit the upper trend line. That is the $2 million question. But even if it doesn't, we're running out of time. Okay. Post-election, I believe there's going to be a massive rip-your-face-off rally that is coming. Okay. What's China afraid of? Imploding debt market. That's what. And bazooka is an indication of panic. I've been saying that. And so BABA, though, is looking tired from that exhaustion run. We're looking for a correction. All right, these type of things, if you haven't learned anything from 2008 financial crisis, is that these bazookas last very, very short period of time. It gets fantastic rips, and then that needs to be shorted. Okay, Solemn Rosh Hashanah full effect. This year it's October 2nd. We are now on market crash watch. Okay, all right, things have changed. VIX is building energy to move higher. We talked about that. Closing above 20.65 is very bearish. Okay. We talked about the Fed pivots and cutting cycle coincides with market crashes and sell-offs. 561.67 still remains that level. Below it starts the correction, impulsive to the downside, right? BABA looks good to me. I like BABA. Look for a sharp pullback. It's making a climax top. Okay. Amazon Prime Week. Okay. Let's watch this. All right. Amazon has been going gangbusters ahead of it. Even if they report Blockbuster Week, there's the sales rates are declining. I think I've done a analysis on that like 4 or 5 months ago. Okay. Go find that video on my YouTube. It's still there. Okay. It's still educational. A lot of you haven't watched it though. Tesla is stalling. Ran up ahead of the Robotaxi week on 10.9. Is it sell the news? And all of these guys, all right, BAC, is that in trouble? SMCI rang the bell. DOJ continues, okay? So that's what I have for you, all right? I do believe there is storm brewing. And we are now on, kind of talking about, hey, warning, warning, warning. And now we're watching, okay? We're on a crash watch, all right? So thank you so much for watching. I know this one is really long, okay? That's why I broke it up into 2 parts. Otherwise, you'd have to watch a 2-hour video. And who watches 2-hour video? YouTube videos. Follow me at Galaxy Doc Market. Like us, share us, and above all, comment. Good and bad. I like all of them. If you think I'm full of crap, let me know. If you think I'm doing a good job, let me know. All of it, which motivates me to be better. And then, of course, subscribe. Give me thumbs up. I don't know why it's hard to get a like, okay? But please give me a thumbs up. Now, if you, I have a lot of people say my memberships are expensive because I want serious traders, okay, folks? All right. But I also have a social media package, which is still good. You're going to get these type of daily market commentaries, SPY pivots for you scalpers out there, and a weekly watch list. And during the earnings season, what I'm looking at. Domino's Pizza, guys. There, I said it. And it's affordable, all right? It's like $60 a month, all right? And for those of you that are tight and trying to build your account but need some guidance, this is the way to do it, all right? Anyways, good luck out there. There's a lot of crap brewing, okay? And, don't jump to conclusions about things, but let things confirm. All right, let's get some alpha. Bye-bye.